It has finally happened. Russia has waged war on Ukraine. And in this video, we are going to be talking about the impact it has on the markets. Hello and welcome to the Pine Street Capital YouTube channel where we talk all things trading and investing. My name is Ron and I'm the managing partner of Pine Street Capital. I've been trading for over 7 years and today I'm here to bring you some market analysis which is brought to you by the World Series of Trading, the only place where you can make real money trading virtual funds. Now, before we get into this market analysis, I need to remind you that none of these videos constitute as financial advice or advice of any kind to take a position in any financial instrument. So let's get into it. It has finally happened. We got news flow this morning that President Putin has made a move to demilitarize and denazify the Ukrainian military, right? So let me just go through the important timeline that's been outlined by a MoneyWeb article that I saw this morning, right? So I hope right now you can see the article I'm referring to. Right, and this article reads, Kyiv says Russia has invaded its cities and there are airstrikes going on at the moment. So Ukraine has accused President Vladimir Putin of carrying out a full-scale invasion after the Russian president said he has ordered a special military operation to protect the Donbas region of the Eastern Ukraine. Right. Now, the important part of this article is the timeline in which all of this happened. So this is European Central Time, which if you're in South Africa is 1 hour behind us. So over here it says the Ukrainian parliament backs state of emergency, right? That was at 9 p.m. so 10 p.m. in South Africa, and you'll get it as we go on. So Ukraine parliament backs state of emergency, right? So after hours of debate, Ukraine's parliament agreed to approve President Zelensky's decree to impose a national state of emergency over the rising tensions with Russia, right? And they said that this would last for 30 days from the 24th of February, right? Then an hour and 15 minutes later, the Kremlin says separatist leaders seek Putin's aid, and this essentially led to Putin signing document with the separatist leaders calling for Russian support on the ground, right? So that was signed in at 10:15 p.m. Central European time. Right after that, at 11:53, President Zelensky urged the Russian president not to escalate the crisis, right? And he responded about 4 hours later. Well, 4 hours later, when the markets then slumped after Putin announced military action. This was at 4:33 a.m., which if you're in South Africa is 5:33 a.m. in the morning, right? So it says here that US equity futures and stocks slid on the back of Putin's escalation. S&P 500 and NASDAQ contracts tumbled more than 1%. European futures shed over 2%, and an Asian Pacific equity gauge fell to the lowest level this month. And that's not only this month, but it's at a low at a low we haven't seen since 2020. And I don't need to remind you what happened in 2020, right? So shortly after that, literally 9 minutes later, Biden says the world will hold Russia accountable. President Biden said in a statement that Putin has chosen a premeditated war that will bring a catastrophic loss of life and human suffering.
adding that Russia alone would be responsible for the death and destruction this attack will bring. Right. So that's 4:42 a.m. and about 20 minutes later, Putin comes out and says that the US has essentially crossed Russia's red lines because of the expansion of the NATO because of the expansion of NATO, right? And as you know, NATO has essentially covered most of Western Europe, and over the years have been moving towards Eastern Europe. The only other countries within Eastern Europe that aren't NATO members are Ukraine and Russia, which is why Russia feels so threatened, because of the proximity of Ukraine to essentially what's a NATO surrounded region, right? So in the past, what happened was Russia was essentially backed, they had their back against the wall, right, because of their geographical location. And the expansion of NATO puts them in the exact same position that they had historically. So Putin called for NATO to, his demand was that NATO doesn't expand, and they actually rejected this. They rejected a legal guarantee for Russia that NATO would not expand. So President Putin essentially spoke about that 20 minutes after Biden announced that they'd hold Russia accountable. And then 16 minutes after this, Ukraine closes the airspace to passenger flights, right? Then after that, in fact, 10 minutes before that, what happened was the Ukrainian foreign minister said in a tweet that Russia's president had launched a full-scale invasion of Ukraine, right? So that's essentially the timeline of everything that's happened so far, and we continue to monitor the situation. Now, let's move on to the impact that all of this has on the financial markets. And I hope you can see my screen right now. Now, you can definitely take advantage of such opportunities like this within the World Series of Trading competitions that are going on right now, because this is not something that's only isolated to one instrument, but many instruments which you can trade within the competitions, right? So if you are in the monthly star competition, you obviously have access to all instruments, which are the US indices, you've got access to Forex, you've got access to commodities, and you've got access to cryptocurrencies, right? So you can make a few plays as a result of this news flow coming in. Now, I'm just going to cover the main markets and markets that are probably going to be most affected by this Russian full-scale attack on Ukraine, right? So with the Dow Jones Industrial Average, this is a gauge, one of the gauges for stock markets, right? And as you can see, we've broken through this major level of support, and market has actually hit a new low. Well, with the futures, we've actually hit a new low for 2022. And this is significant considering the kind of drop that we saw within the equity markets back in January, right? So right over here, this market, you'd assume that it's oversold, but given the fact that we are trading on news flow at the moment, that's the current state of the market. There's really no such thing as oversold. However, the trades that present the best risk reward opportunities, if you are playing for an escalation in the panic as a result of rising geopolitical tensions, then you definitely want to play it after a somewhat of a bounce within the equity markets, right? Which it looks like we're getting right now, because it's about 10:13 a.m. right now, and European markets have just opened. So if we do get a little bit of a bounce, it might be a good idea to look for areas to start taking short positions in, right? So, as you know, when the US sneezes, the rest of the world catches a cold. So it's the same applies across the board. I'd be looking to play on bounces in equities to play them to the short side, because I am pretty sure that this is not the low that we're going to see after this whole escalation to the Russian situation, right? So those are your equity markets. And moving on to FX. In FX, developed market FX isn't the most interesting space. So what I am going to cover is emerging market FX. Now, with emerging market FX, as you can see, this is the effect that this entire thing has had on the Russian ruble, right? The Russian ruble is currently 10% up. And just to give you perspective, the average move that you get in the Russian ruble on any given day is about less than 1%. If you get a move of more than 1% in the Russian ruble on any given day, that's a huge move. It's a considerable move. But today we've seen the Russian ruble move down 10%. And the reason we've moved down 10% in the Russian ruble is because of the fact that Russia-Ukraine war doesn't play well for the Russian economy, number one, because of the sanctions that are imposed on the West, right? Right now we've seen a lot of individuals and companies that have been placed on sanctions lists, not just by the US, but by the UK and Australia. The Australian Prime Minister actually spoke about an hour ago and actually mentioned the fact that they have intentions of imposing sanctions on a few Russian companies and individuals. That's just another that's just another headline that's hit, if you heard my phone ping. Now this one says, the air raid sirens heard in Kyiv as Russia launches attack on Ukraine. Right, so another thing to mention is the fact that the Ukrainian president came out in his Telegram channel and said that people within Kyiv should seek shelter just in case Russia launches missiles, and that's just to protect the people of Ukraine. So back to the Russian ruble, this wouldn't bode well for the Russian ruble because of the sanctions placed on them. Now, I'm pretty sure they're going to, the meeting that the UN has will actually include the potential for Russia to be removed from the SWIFT payment system. And Russia being removed from the SWIFT payment system is just a nail in the coffin, if you ask me. And if that happens, then you can expect further declines in the Russian ruble, right? And the Russian ruble this decline in the Russian ruble doesn't happen in isolation, right? The Russian ruble usually trades in an emerging market basket, right? So this drags down a lot of emerging market currencies along with it, and that includes the South African rand. So in the South African rand, as you can see, we've seen huge declines in the South African rand, which is down more than 1% today alone, right? And the major story I think a lot of players are looking at is the story in WTI. So, WTI and Brent. So Brent crude oil actually surpassed $100 per barrel. And we could be expecting the exact same thing to happen with WTI within the next couple of hours, because it's just about $1.5 away from that, right? And $1.5 within these volatile markets, it's not a far stretch of the imagination to assume that it's going to hit that level within the next couple of hours. Next thing is gold. Gold is a safe haven. So obviously, when you get an increase in risk, then a lot of traders go to gold for a safe haven bid, and the other one's the yen. So that's the picture within the markets very quickly. And I would definitely take advantage of this within the World Series of Trading competitions. And, just continue to monitor the headlines, keep the risk managed.
Now, if you like this video, please smash the like button below and subscribe to our YouTube channel for more content just like it. And if you'd like to learn how we approach the markets, you can do so by joining the Professional Trading Masterclass course using the link in the description. But other than that, I'll see you in the next one.